Hello, my name is David Miller. I'm the manager of Nexus Global Solutions Portfolio and the co-manager of Dynamic. I'm speaking to you in early December. Still no Brexit deal, by the way. Well, it's hard to imagine what the world was like 1 month ago, but on the 9th of November, we had the good news that there was a potential vaccine for this virus, and markets responded really well. It was the best month for investors for decades in some cases. It just shows what happens when there is good news after a long period of uncertainty. And both portfolios were in excellent position to benefit. The all equity dynamic portfolio was up 9%. The diversified solutions portfolio, which includes fixed interest and alternatives, but still 50% plus in equities, was up just less than 6%. That means that both portfolios are now in positive territory this year and over the last 12 months, which is very pleasing to report, given all that we have gone through in the last year. So that's where we are now. Asset allocation hasn't changed much in recent months. We've been fairly fully invested within the mandates agreed, and as I say, in good position. Stock selection, that's been where the action has been, and it has been interesting to see that as optimism about the future has increased, particularly now that we have the potential for a vaccine, it's been the COVID losers that have done best rather than the COVID winners, which had been the star performers for the year as a whole. So to give some examples, we're invested in Airbus and Marriott, both of them up over 30% in November, whereas Microsoft and Apple only up about 5%. You can see the benefits of diversification when you have a rotation like this, and our job over the coming months will be to position the portfolios correctly for the future. Now, what of that future? The good news is that it is quite possible that we will get further economic growth next year, a strengthening of the recovery, most likely in the second half of the year rather than immediately. It's likely to be a bit of a tough winter, I think, for many businesses and consumers. But that's the good news. We've got low interest rates likely to stay close to zero for a long time to come, lots of central bank and government support, and as I said, the recovery was already in place before the vaccine. All of that adds up to good news. Quite clearly, there will be challenges over the coming months. The rollout of the vaccines requires good implementation, not just in one country, but across many, and it has to be shown to be effective across the broader population and not just the test group. And then, of course, it's confidence, the intangible. How confident will we become, and how soon will we become more confident? These are very difficult things to judge, which is why close attention to the detail will matter. Manufacturing is doing well because of growth, and good companies are represented in the portfolio. The challenge will be to get the consumer services companies right. We just haven't gone on holiday. We haven't been to restaurants or cinemas. Those companies have been having terrible trouble. The question is, how quickly will we return to some sort of normal behavior, or will we be changed forever? These are questions for the future, but I can assure you that the foundations, the cornerstones of both portfolios, quality and liquidity, diversification, which have served us so well this year, are still in place now and will be next year. An exciting year to come, I think, and one where investment opportunities will be numerous, as well as the threats. There's always going to be that balance. I hope that these comments have been useful. All I have left to say is that I do wish you all a happy Christmas, a healthy and prosperous new year, and I look forward to reporting to you again in 2021. Thank you.